Hello, everybody. Welcome to today's story. Yes, the markets have sucked. Yes, our hopes and dreams are dashed. But let's see if we can salvage anything from all that's happened. And a lot of people are still very bullish for year end. I don't know, not so much. But anyway, let's get into the story. This is covering a whole bunch of stuff, hammering new rules again for the umpteenth time. People still making the same mistakes. Profit taking. Is it too late to take profits? How do you live off your wealth? How do you de-risk after you've made life-changing money, and so much more? Let's get into it. This one's called Too Late to Take Profits and Never Financial Advice. Just a guy on the internet, literally. That's all I am. And I appreciate everybody being here. And all the questions come from Patreon. And thank you, Elga, as well. And T&D Tesla and Sean D, good to see you again. And K8, really appreciate everybody turning up. Let's get into the story. It's an important one, especially at this time of the market. First question is from the Matrix, MTRX. I am hyper aggressive with my investments for the last 4 to 5 years now, and it worked quite well. At the beginning, I felt like I can only win. My goals are not reached yet, but I start to ask myself the question, how exactly do I proceed once my goals are met and I want to go risk off, retire, and live purely from my investment capital? I don't want to lose what it took a lifetime to build. Gruß aus Deutschland. Thank you so much. I love seeing people from all over the world. The more exotic the country, the better. First of all, you know, I always talk about this curve. Well, let's turn this screen off for now. I talk about this curve. When you have no money, you can take huge risks because you've got nothing to lose. When you have medium levels of money, you start to de-risk because you can't afford to lose what you've made. And then when you have oodles of money, you can do whatever you want. Doesn't matter, as long as you, of course, have your castle, etc. So I'm going to try take that kind of the middle of the bell curve. I hope that's okay. And we'll walk through a couple of steps of how I believe you need to plan. And this goes for anybody. And remember, we have people who are age 30 now have enough money to retire. But remember, if you're age 30 and you live to 100, you need 70 years worth of stuff. I'll also showcase some new tools we have as well. That'll help everybody in that process. First of all, calculate your living costs. How much do you need to spend per year? Always, 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 always spend a lot less than you have, okay? Invest. The opportunity cost of spending today is extremely high on the cusp of AI. Didn't mean for that to rhyme. Sorry about that. Also, add inflation to healthcare buffer. I've heard so many stories of people their families get ravaged by an event. I've lived through two myself. Both my parents got cancer. Both didn't make it. Both caused a lot of disruption. So again, one illness or sickness can destroy things. So please make sure you can account for that as well. Then estimate your retirement duration. So important. If you're 30 and you live to 100, that's 70 years. And there's a lot of medical advancements coming with AI too, which will help people live longer as well. There might be a downgrade of cancer to being a chronic illness instead of a deadly death sentence, which is great news too. Again, a lot of good news on the horizon. And add up all your investments. Try get to certain bogey numbers. In the old days, you could retire in $1 million in an expensive Western city. Now it's about 2 million. That's the bogey number. I'll actually make a post on Patreon about the 2 million number because I've done a lot of research into why that could be the new bogey, unless you really know how to trade. So that's step one. Make sure you take all those steps. Step two, did I blow that up, by the way? I think I did. So I hope people can see. Step two, choose a safe withdrawal rate. I always talk about that, you know, whatever it is. Sometimes that's 4% of your bag, or 50,000 a year, or 4,000 a month, or 200 grand a year, depending on how lavish a lifestyle you have. Maybe add a little cash and reserves in the bank as well. And make sure as well you manage taxes very efficiently. That is super critical. Again, especially in the early years. The longer you can hold a bag, imagine you're retiring for 25 years, the slower you eat into it has a huge payoff down the line. If you start living a lot earlier, like a lot more lavish lifestyle, big opportunity cost down the line, especially if something bad hits. I did have one friend that did tell me, though, he had a bad motorbike accident and he has some chronic issues, let's just say. He's 55. And he said, basically, now is the time for me to make my vacations, because when I'm 65, I'll have all the money I need, but I won't be able to get on a plane and go to all these lavish places. So there are exceptions when you need to make memories as well earlier. Bear that in mind too. Going off on a few tangents here, but that's what happens. Step 3, sell off risky investments. You start to de-risk over 6 to 12 months. Don't do anything big. Aim for a stable mix, 20 to 40% income generators. We now have things called STRC and STRE in Europe as well. Yeah, I believe everybody should be in 40 to 60% disruption. Disruption is the new bond market. It used to be a 40-60, 60-40 portfolio with a big chunk of bonds. You just got to be in disruption, because that's going to be huge, but be in the right places too. And then, of course, have some safe investments as well, including some cash, 10 to 20% cash for those rainy days, so you don't have to sell your good assets. And step 4, income streams, covered calls, STRC, maybe even dividends for some things. If you have a stock at a very low cost basis and it kicks off 4, 5, 6% dividend every year, that can be good. And step 5, very important. You hear me say this all the time. Tap dancing shoes. Imagine you're in an asset and all of a sudden a competitor comes in and destroys that business. I'll give you an example. Tap dancing shoes means always keep an eye on your bags. Be ready to pivot in the event something goes sideways. Imagine Bitcoin has a quantum hack or a double spend, goes to 0. Boom, done. Imagine macro hard from XAI destroys Microsoft. Boom, done. Always keep your eye at the window, and things do change as well. Watch your bags every 1 month or 3 months at the latest. Monitor changes in any of your living expenses. Update your healthcare plans to make sure as well. Have catastrophic, if you can't afford a lot of healthcare maybe you don't need, but you always need that catastrophic insurance in the event something really bad happens. Maybe have a big high deductible of 10 grand or something, but have the catastrophe covered in the event it does happen. Touch wood, it never happens. And consider other family changes that may impact your finances. Imagine your son has a couple of babies and he's unemployed and the wife has to be at home and all of a sudden you're on the hook. So things like that, use your imagination. So the other thing as well, we do have the retire on model that's being tested as we speak. And it's a little more complex than meets the eye. But everybody will be able to plug in their assets, their expected CAGR, their allocations, how much they need per year, when they need to start withdrawing, et cetera, et cetera. And we have this table as well, so you'll see exactly what you have by position and how much you withdraw, living expenses, and how much you have left. If this works out and disruption does what I think it's going to do, and you live a medium lifestyle, you can see here, less than $300,000 in assets, you can spend for 25, 30 years and still leave a huge fund to your loved ones. That's the goal. That'll help you plan. We'll circle back to this later once it's live and show you exactly how to configure it, but also think of the allocations like your income producing assets, etc. All will be there. Now, as usual, the dog has come in to eat some wires. Session night. Excuse me. All right. Always the same. Oh, apologies. Brad, thruable. I should probably go back and do that in a minute. But anyway, live TV, always the way. Next, we have Garry. Garry says, I recently sold my second business at a loss due to the challenging economic times and increased competition nearby. After covering all related expenses, I'm left with $200K in cash, which happens to be the same amount I owe to the bank for this business at 10% per annum, monthly repayment $7K. I'm considering using $100,000 of the cash to pay down the loan, which would reduce my monthly payment to around $4,000, maybe $3,500, a level I can comfortably manage through my other business. And that would leave me with the remaining $100,000 to invest in either Tesla or Bitcoin. To give you some context, if I invest the remaining $100K in Tesla, it would bring my position to 150% of my retire on bag for Tesla. I already have retire on bag for Bitcoin and Sol as well. I'd really appreciate your input on which approach makes the most sense. There's a couple of things in here we need to unpack. One, A loan at 10% is very, very expensive. Get rid of it. My threshold for money you pay on money is like 5.5%, 6%. So that is high. Maybe you can try refinance the 100 grand. I do believe you need to reduce it. So I actually like your 100,000 payoff number. I also like the fact that you got multiple businesses. That's cool. Everybody needs multiple paths of revenue, multiple side hustles, whatever you want to call them. Very important. So nice work there. Now, what I've done and what will be super helpful for you is this is a list and the tool, like the retirement model you'll see too. So your rate's too high, get rid of half of the loan if you can, and then DCA into positions and dips. We had a 380 dip on Tesla on Friday, which was sweet. And things like Solana is drastically undervalued for what it does in relation to Ethereum. Yes, Solana is getting no love. ETFs launched, just tanking. And we'll get to the reason why I believe that's happening right now too. In fact, the live price in Sol is, 6 months ago we were at like 98, 95. Now it's 138. So it sucks, completely sucks. But when you look at let's take a side tangent out of Sol for a second. This is one ratio that I like to look at a lot. It's the circulating market cap over transactions per day. Solana is valued at $1,200. Ethereum is valued at $263,233. It's just, I've never seen such disjointed stuff. By the way, Kathy Wood came out today. She said layer 2s on ETH will outperform ETH, which is weird because she just invested in Bitmine too. So I'm going to have to try to see if I read that right or whatever. But even more egregious, and this is the point about crypto, and this is probably why people are losing faith in crypto. It's bloody irrational. Utterly. This is XRP. The amount of fully diluted market cap per user. This one is per transaction. This one is per user. Okay. ETH is valued at $800,000 per user. XRP is valued at $11 million per user. Meta is $290. Okay. So crypto should be around $1,000 or less to be comparable to traditional assets. It is not even in the same solar system. That's how crazy this stuff is. And one of my dreams was logic would creep into crypto in the year 2025. Boy, did I get that prediction wrong. Oh, well, there we go. Moving on. Garry, I plugged in your assets into the retire on model for giggles. And imagine you start pulling from them in the year 2030. You got your Tesla, Sol, Bitcoin, and I assumed you bought 100 grand more of Tesla. And your bags will look something like this. You got $272,870 in the market. Start pulling out 50K starting in the year 2030 for 30 years, and you will be fine. And always keep your side business and use your side business to do luxury vacations and buy your new Tesla Roadster, whatever you want to do. That's what I do. So more on this later, and we'll have a lot of people playing with this new system and really, really helping manage all their different scenarios. You'll be able to toggle different switches. You want to be super bearish, expected scenario, realistic, bullish, whatever, to be able to understand where you're going. Next question is from Tyrannosaurus Rex. Appropriate name. If AI and robots make people underemployed, then how will governments balance the taxes lost? In the UK, big company workers pay income tax, but company profits often go offshore, e.g. Amazon, Google, Meta, Pfizer, Dell. Every company does it. As I say, money gives you wings, and there'll always be a flight to a tax-free jurisdiction. We're seeing that happen right now in the US. But let me, before I share this as well, a warning. This is how I see things going, how I've seen them go for quite some time, but I didn't expect what I call UBI Nation. I hope that phrase catches on. I'm talking about it for about 2 years, to catch on till about 2030. Unfortunately, it's already happening. And this might see a little bit dystopian, a little Orwellian, but I'm not here to sugarcoat things. I'll paint a realistic picture of what I see happening. In fact, it's already happening, or the plans are in place. First of all, You're dead right. Tyrannosaurus wrecked. What happens if the robots and AI take all the jobs? Now, just a conservative impact would be unemployment rise 10 to 20%. Okay, the unemployment you can imagine is 5, 6, 7%, 8%, depending on who you are. Just say it's going to double, maybe triple. It'll probably be a lot higher. And there will be a huge decline in income tax and payroll tax revenue in the US. It's not as bad as the UK. 84% of US federal revenue comes from income tax from individuals. And it's only 42% of UK revenue. So the UK must make a lot more money on VAT and things like that, sales tax. There will be global tax shortfalls in the trillions, and government budgets will be destroyed. All social programs will be absolutely, completely wrecked out there. Pensions, healthcare, social security, etc. And as people rely more on the system, that brings about more problems. So that's the first step. Second step, this is regarding the business side of everything. Corporate profits and capital income will skyrocket. We are already seeing that happen right now. Earnings are going through the roof. Companies aren't hiring. Why? AI is the answer. And this is also going to make the rich even more unpopular. We will have a massive concentration amongst the AI owners, among the people that own hard assets, etc. Then you'll have UBI Nation that'll be created. It's already happening. You have states in the US that are electing officials that promise them free transport, free childcare, free grocery stores, free education, free whatever, free housing or very reduced cost of housing, all that type of stuff. It's already here. It's landed 5 years ahead of time. And then what will happen too, because so many people will be in need, everybody will vote in socialists. People that give the best benefits will be the most popular in a campaign. We also just saw that happen in 2 different places for mayors. Now, robot AI taxes will probably recapture lost payroll taxes. There could also be taxes on energy, electricity, AI infra, data centers, commute tokens, you name it, etc. And there could also be higher corporate taxes and capital gains for those who have assets. But those with the assets, guess what they're going to do? They're going to go offshore. Okay, so it's going to be very hard to grab that. You have plans of certain states to increase taxes on corporations in the United States. What do? Sayonara, bye-bye. They move to Texas or Florida or go offshore altogether. You know, Guernsey, Isle of Man, all these places too. So that's what will typically happen. And the safety nets will be everywhere because society needs it. There will be much more unemployment insurance. UBI will be the central pillar of society and bring about, hopefully, social stability. And then they have to pivot to consumption-based taxes, sales tax, value-added tax, whatever. And that will be the primary source of income if labor taxes collapse, which they will. And then the other thing that I hope nations do is sovereign wealth funds find a way to invest in this technology, to build money to fund all the UBI, universal basic income out there. So it's I'm painting a pretty ugly picture, but there's good news at the end. Wait. There will be some global risks that I see happening too. This is the dystopian part, because what do people do when they have no passion, no challenge in life, no purpose? They become, idle hands make for the devil's work type of thing. That's exactly what's going to happen. We're already seeing that too. There'll be that inequality. Hard asset owners will capture all the gains, like the people watching this channel. There will be social unrest, much more crime, riots, protests, and politicians will fuel hatred of the millionaire, billionaire, and trillionaire class. Already happening. Then there'll be offshoring of automation to avoid AI robot taxes. And then innovation will slow down if AI taxes are too aggressive. There's already so much talk over the last 2 weeks of putting data centers in space. Good luck taxing that, my friends. How are you going to do that? No real estate, solar energy, completely self-sufficient data centers in space, bouncing data back using Starlink. That's the plan, and that is going to happen. And that data center in space will use about a quarter of the electricity the United States uses. except it'll be all solar powered, which people think is a scam, but it's not. Every satellite up in space runs off solar power, so definitely not a scam. Now, after all that, and Tyrannosaurus Rex, you did ask a hard question, and here is the rainbow and unicorn abundance scenario. The AI-induced wealth and productivity boom. Everybody will be loaded. Governments will give out super generous universal basic income. We'll all be making hundreds of thousands a year. And everybody will be, biking, fishing, hiking, all day, every day, painting, playing music in the park, hanging out at the bar, spending their generous UBI. Is that going to happen? No. More like that. And people will flee to places that are safe, because that's going to be one of the biggest risks as well. Because with a lot of very angry, upset people without anything to do, again, the idle hands will make for the devil's work, as they say. So that is what I see happening step by step. You asked the question, don't shoot the messenger. Anyway, drop a comment below if you disagree with any of the above, and I'd like to hear more about the abundance piece, which I don't fully buy into. Anyway, this is from DMACD. Love your work. Here's a question I think a lot of entrepreneurs under 35 are caught in. At what point, as a still building founder with high conviction in Tesla, does it make sense to just deploy the cash, stop wasting energy trying to chart and track for dips, and refocus energy on growing the business instead of trying out the smart entry timing? Painfully underweight Tesla at only 8%, 8% cash, long-term horizon, but burning energy, keeping up with the market instead of building. Not asking for a prediction, just if you got a rule du jour for this exact phase of the journey. But it's funny because the question earlier above, a fellow sold one business at a loss, unfortunately, but has another business going. So first of all, don't have all your eggs in one basket, maybe 2 baskets, and your assets, same thing, maybe 2 to 4 baskets. But let's break down what I would do if I were you. First of all, it doesn't take a lot of time to be able to invest in Tesla. Don't overthink it. Decide how much you want long term. You're looking for 300 shares, 500 shares, 1,000 shares. Put half in now. Don't stress. Sub 400 if you can get it. We were there on Friday, 380. DCAS the rest on big dips, 10% plus. And all you need is 10, 20, 30 minutes a week to check on the markets. You can plug in your little layer on TradingView and the alarm goes off. If it hits, go bing. Sometimes I'm making videos and that goes bing when something falls into my trap. I set lots of traps. Consider my TradingView like full of spider webs to catch things as they drop. And then get back to work and invest heavily in the side hustle. Now, some steps regarding that. A couple of things. Building a business is not easy, okay? You have to absolutely work 7 days a week. No exceptions. No exceptions, because somebody else will be. Like me. I'm retired and I work 7 days a week. I don't need to, but I love it. So it's actually fun for me. But here's a couple of things. World is very competitive, getting more so. It's crowded. And you're competing against not just people in your city or your state or your country, but people from all over the world. Okay, you're young. You've got time. Compound your skills. Focus on literally reinventing yourself and ignore all distractions. When you have to go to work for how many hours it is a day, 8 hours, 16 hours a day, be completely focused. Don't let things distract you. Very important. If you you can easily get distracted and lose 10 hours a day on a Discord or looking at Twitter or something like that. Also, use this crazy situation we have now as fuel, as motivation. Okay, this AI is not a killing opportunity. It's a building opportunity. And people give up. They say, oh, AI is coming over, all dead. I say, no. AI is the best opportunity we've ever had in our lifetimes. Okay, focus on creating, shipping, learning, building new skills, use cheap tools, even hire cheap talent offshore. You could hire rock star engineer in Bulgaria, for example. I don't know. It used to be cheap back in the day. I don't know if they are anymore. And start building things and build multiple things. Don't have all your eggs in one basket. One of the crazy things about AI right now is you might work in a something for 2 years, and you might be this close to getting it finished. And then all of a sudden tomorrow there's 5 startups that do the same thing out of nowhere with no funding because AI makes that possible. So have multiple pokers in the fire and be ready to fail fast. If you're going down the wrong path, just pull the plug and go. Move on to something else real quick. That's so important, or else you will lose a lot of time and money. And time is precious, especially in this fast-moving world. And also, if your business takes off and you succeed, your Tesla position won't matter. It'll be tiny compared to the size of your business. And if your business fails, you'll still keep the skills to try again doing something else. And if you only invest, you gain no moat. So again, I like the way you think. Block a core hour, set of hours, like 2 to 4 hours every day of thinking up new ideas. No distractions. Lock yourself in a room and then work on all your existing stuff, and then take that 30 minutes a week to look at the markets. That's all you need to do. Hope that helps for the sub 35s. Next question is from Fadel. Hey, James and Liam, thanks for your efforts. Thank you for being here. Do you think after the biggest liquidation that happened a while ago, I think it was 1010, set a bad sentiment for the crypto market, especially for retail investors, as I am one of them thinking to leave the market to invest in stocks? Ooh. Well, yes, absolutely. Let me explain how retail got hammered and why there's no recovery. Okay, for years I've been saying that things like Bitcoin, etc., it's an institutional game. It's a treasury game. It's not driven by retail anymore. The asset's too big, to over $2 trillion. It's very hard for retail to move the needle. They could move it when it's $100 million, but not at $2 trillion. Not at all, especially now because people are smashed. They don't have the cash. They don't have the stimmy checks. They don't have the liquid funds because it's been a very tough time. Even though the governments will tell you there's been no recession, there has been many, many, many recessions too. So some of the detail here, retail investors got absolutely hammered. Okay, some of the scary numbers. Retail makes up about 70% of all leverage trading in these events. And in 2025 alone, $125 billion was liquidated. $125 billion. Okay, October's hit alone nuked 2 to 4 million retail accounts. What I mean by nuked, it went to zero. Gone, lost everything. And then you have other things. You got liquidity, rug pull on poop coins, 6 billion lost there. And then you have billions of money, people trapped in dead projects waiting for it to return. They buy something at, say, $10, it goes to $1, and they sit and hold it. It's dead money. It's never going to make it back. Okay, remember, 99.5% of crypto is complete BS. And yes, Fidel, people are very upset. Very upset. They're checked out. They're gone. They've been wrecked, nuked, destroyed, whatever you want to say. So you're dead right there. Now, I want to spend a second, because for years, I've also said all the money I've made hasn't been in crypto. It's been in stocks. Okay? Because they are safer. They're predictable. They're protected. It's very rare you see a rug pull, maybe with one of these fake electric truck companies. I can't remember what it's called. But you also have options to protect yourself. Covered calls to make money. Hedge to protect yourself for risk. You got leaps to amplify your bags. And just for a point of record, trading leaps, for example, for me over the last 12 to 18 months, made me far more money than stacking Bitcoin since 2017. It's 8 years of stacking. I made more in just a year, just on leaps and Tesla and rotation. And I remember, I just share this again. Things are very predictable in stocks. They are not predictable in crypto. We know Bitcoin's hard and it'll go up over time, assuming there's no quantum computing and a double spend problem. But I remember a year and a half ago, I shared the slide on the 4th of July, 2024, and I was laughed out of the room. Everybody's like, this guy's an idiot. Bitcoin's going to do way better than Tesla. Yeah, at the time, 18 months ago, Bitcoin's at $66,705. Tesla was 177. And I said by 2032, Tesla would do a 27x. And that's based on a 4,800 price target. That's actually gone up a lot now. It's even higher. And Bitcoin might be around 623,000 in 2032. Maybe it'll hit 1 million. We're not sure. Those are the numbers. And I was like damn certain that this is going to happen. Let's check in a year and a half later. Today, Tesla's gone up 131%. Bitcoin's only up 40% because of the bull market we didn't have. So stocks with the security, the protection, the amount of data available, the hedging, the optionality, much better place for that. So go play there. Yeah, for sure. And that's what a lot of people are doing too. From Teslaholic, next question. I'm wondering if you or anyone else on the team have experience using the optimized trend model on the 1 day to trade, using Confluence and Mean Reversion as secondary tools for Confluence. If the asset traded is a premium asset like Big 7 or crypto, seems like easy money. Is there some hidden complexity or pitfall that I need to be aware of? And if the stock chops sideways and the trend goes back and forth, you can potentially lose some money, small money, but you can make it back with the big moves. Thank you in advance for your time. We have a bunch of people using the optimized trend, and just to explain what the optimized trend is, it was the hardest mathematical problem I've ever had to solve in my entire life. It burnt my brains for probably 3 or 4 years, and I was thinking about it for a much longer period of time, but solving this problem was really difficult. And what it does, it calculates trend for each specific asset based on history. Each trend is unique to that asset, no matter what you're looking at. It is crypto or oil or gold. So that's what the OT is. Let's look at some examples, and I'll point out some of the pitfalls as well. We'll look at some of our favorite assets and show you how you can actually use it. Gray is in, orange is out. In means buy, orange is sell. The optimized trend will keep you in the trade. So here, this is Bitcoin. I'll go through these pretty quickly. Bitcoin would have got you in at like 54, 56K. Would have got you out for the first time around 104,000. In again, 75K. That's the tariff tantrum in April. And I'm only looking at 2 years of data here. Out again at around 117, 118K. In again, this is a little bit of a fake out here. In again around 111K. Out again, depending on when you can time it, 116K. It did spike to 125, but it was very short-lived. And then that's it. You'd still be out of the trade on Bitcoin. This one's a little more sloppy. Solana, a lot of manipulation, a lot of up, in, out, but it's easy to play. Again, 2 years of data. A couple more. Tesla, also a little bit tricky, a little bit sloppy like Solana. Very volatile, very sensitive to things that Elon may say or what the government may do. But you get in around 106, you get out around 240, in again around 160, out around 240. Notice it went to 240 twice. In again around 200. Out 475 or 420, 460, depending on when you can time it. In again. And the important thing about this trend model is it takes time to confirm the movement, but you're dead right in saying it does make these big swings, and that's what you need to play. I think it was Warren Buffett, he said, go for the fat pitches. I don't know baseball, but I think that means the pitches that are easy to hit out of the park. They're the fat pitches. Go for those. And that's the big, long runs here in blue you're looking for. Out again, in again, pretty simple. Let's look at this one. Is a little more straightforward. This is NVIDIA. And a little trick here too. So we're in at 60, out at around 120, 130, in again around 110, out around 140, in again at 88, 90 during, again, the April tariff tantrums, and you'd ride it all the way up. But the thing that's really unusual, sometimes you get a little bit of skinny girth, like a little thin piece of orange. Don't let that freak you out. Sometimes you need to stay in the trade. Maybe that's when you see that skinny piece of girth, that's when you put a stop loss in under a certain limit of where you think it could go. So in that little skinny piece up on the right there, you probably put a stop loss in around 169 in case it did dip. Next, what else? The final one, MicroStrategy. Very clean, very easy. In at 100, out around 360, in again around 240, 260, out again at 420, and you'd be out the whole time. This would have saved a lot of people a lot of pain. And again, the proxies have been brutal. NAV premium has evaporated for MicroStrategy, but they continue to buy. I believe they'll announce maybe 7,000 to 8,000 Bitcoin bought on Monday. which will be equivalent of about 1.25% Satoshi per share accretion. So if you bought a share last week, forget the price of the share. You bought a share, it's going to have 1.25% more Bitcoin potentially tomorrow. We'll see if my math is right. Anyway, that's the game you play with that. And when the momentum interest comes back to Bitcoin, if we're not in a bear market, then that asset will do well. Once again, like it did, by the way, MicroStrategy, and I've lived through this because I've been in it since September 2020. I went through the bear market and bought more at the bottom of the bear, and it's been a very, very, very giving trade because of that. Anyway, next question is from Angel Investor, which ties into MicroStrategy and other things. I'm a 54-year-old woman and haven't worked for so many years due to health. Well, I pray your health gets better in the near term. My house is paid off. That's good. I was able to acquire a humble Tesla position for my retirement bag, as I hope to officially retire in 5 years in 2030. I have a small amount of Bitcoin and was planning on adding it to my retirement bag. As you always have said, never sell all your Bitcoin. Yes, just in case it goes to the moon. But unfortunately, I owe a lot of student loan debt and have no cash flow. So with the looming bear approaching and the slower pace of Bitcoin, I'm considering moving my Bitcoin to a faster horse, such as STRC, which would provide some income. Is this a viable option through the bear market? If not, is there a better, safer alternative? Thank you for all your work. Well, I'm very happy you have this question. I'm very sorry about your health and everything else. But we have the retire on model that'll help you exactly plan where you are. I can't tell you what to do because I don't know your allocations. I don't know how much Bitcoin you have. I don't know how much your debt is, all that type of stuff. If I had that out of a much better picture, I'd be able to be much more prescriptive as to what you need to do. But remember, STRC is not a faster horse. It's like a money market on steroids that pays you 10%. So it's not like a stock per se, but it's a preferred share, but acts more like a money market. Again, because I don't have your allocations, it's very difficult to say. But what you can do very soon with the new retire on model, this is exactly what it's built for. You'll be able to plug in your existing portfolio, and you'll be able to plug in and build as many portfolios as you want, plug in a secondary portfolio, assuming, you move part of your Bitcoin to STRC and put in your return on that as well. You'll be able to configure all your CAGRs for all the assets and when you want to retire in 2030. This is designed specifically for you. And we can do actually a Patreon session once that's up and running live, where we can configure people's accounts live just to show them exactly the different scenarios and how to build scenarios so you can plan accordingly. And even with very, very conservative projections to make sure you have enough for your retirement. Next question is from Susuhi. Hi, James. Always grateful to you and the team for all you do. Appreciate you. I've been studying options, watching YouTube videos, and others recommended by our community, and reading option books. My plan is to take profits from Bitcoin and Sol and move them into stock exchanges, so I'm ready for the right moment to enter options. My question is, I want to follow our profit-taking model correctly, taking a total of 50% profits if we reach level 6 to 10. I also need those profits to secure enough margin for when the time is right to start trading options. Sometimes I wonder, though, if we enter a bear market, could I miss big opportunities? What would you do in my situation? Well, I like the way you think, and I like the way the other question from Fada thinks earlier is moving into stocks and equities. But I do want to spend a second on profit taking. And we spent a lot of time years ago building the profit-taking model. And layer 6 to 10, I like the way you're thinking. Just plugging Solana in here for giggles. If you had plugged and I assuming you have 500 tokens of Solana, if you had used this model, and by the way, I didn't. I thought Solana was going a lot higher. It didn't do that. So my mistake was expecting 2025 to be a bull market for crypto. It did not happen at all by any stretch of the imagination. In fact, if we all sold everything back in November 2024 and did something else in AI, we would have all killed it. We did some profit taking, but not enough. And this is a very good example here of how we need to trust the data science, trust the models. If you had plugged in and took profits on Solana at layer 6 through 10, guess how many layers would have hit already? You would have hit layer 6, layer 7, and layer 8. Layer 6 would have sold at $201, layer 7, $230.95, and layer 8, $277.95. And the weighting of how many you would have sold, layer 6, you would have sold 239 of your 500 tokens, layer 7, 109, and layer 8, 53. You would have only 99 left. But the real magic comes here. Okay, profit taking. You would have sold a truckload of money. That 213K is slightly wrong than the table here. It's a little bit different. You would have bagged $89,000 worth. Currently, your 500 bag, if you retained it, would only be worth $68,500 today. Okay? But remember, you'd still have 97 left, which is 14,000. So the point is, profit taking makes complete sense. 89K plus 14K, you'd have 105K, approximately 103K, versus holding your 68K up and down. And this is the real problem, the real pain. And this is why we built this. But sometimes it's like, you know, you're in the Wild West. You got a gun in your holster to protect yourself, and you forget to take it out of your holster. And I too am guilty of that. I did profit taking on certain things, but not all things, because I thought Solana would have gone a lot higher. It didn't. Bad. Bad. Next time we'll be ready. And I do believe good things are still coming. Okay, we're going to get the market structure bill for crypto. This thing is taking off. The world's going to be tokenized. This is the leading chain. No ifs, ands, or buts from the data above. But we'll see what happens. So do that. The big question is, are we through profit taking? Are we going to get another run? I don't know. JP Morgan said 94K is the bottom for Bitcoin, and we're going to go to 170K within a year. First time in my life. I hope JP Morgan is right. Go JP Morgan. Go. I have a bank account at JP Morgan, by the way. Anyway, next question. Greetings from Norway, from Chesterdor. My question this week is something I have thought about for a while. Something is suspicious in the markets. Risk on stocks are rising fast, but crypto is in a slump. Weird, huh? As we say in Norway, the owls are in the moss. I like that. If global liquidity surging, M2 up, central banks easing, yet crypto stuck in a rut, not the bull run we'd expect. Is AI stealing the show, sucking up all the liquidity available? Meanwhile, credit card, auto, and mortgage delinquencies are rising amid high rates. Shouldn't that extra cash, wages, borrowing go to debt payoff first, not risky plays like Bitcoin and alts? Am I missing something, or does this explain the stall? You nailed it, except you missed one thing. The absolute rapage by the perp dexes, etc., taking, I don't know how many, $100 billion away from 70% of retail accounts that got wrecked. No wonder every little perp dex wants to create a new perp dex, because they can just fleece customers by being in cahoots with market makers and everything else. So that piece is missing, but you're right. People are wrecked. They got no cash. They're trying to keep afloat. People do everything they possibly can to pay their mortgage because they don't want to lose their castle. Unless their castle's underwater, which isn't likely considering the hardness of an asset. But this is also a big part of it too. We have shiny new things, not just AI, but also energy. We have so many people YOLO'd into the Oklo and nuclear stocks and SMR and everything else. All got whacked as well very recently too. But you're definitely right. AI did steal the spotlight, the rise of ChatGPT, AI tools, better intelligence, new tech obsession has pulled not just money away from crypto, but also talent and focus, etc. And the real use case, which makes this very different to the dot-com bust, which I traded through as well, AI shows immediate practical use cases. It's real. It's not fake. And also a lot of talented blockchain people have left as well. So, and I'm pretty sure the OG sellers of Bitcoin, they're doing a couple of things. Maybe they're moving some into an ETF. Maybe they're taking profits. They're buying castles and lifestyle chips. And maybe another group are actually taking their money and investing into AI. For the first time ever, all right, I've been talking about Tesla and Bitcoin since I started this channel over 5 years ago. Now everybody's talking about Tesla and Bitcoin. It's brilliant. Fantastic. Because if it ain't first, you're last. Last question is from Mad Dog. As a beginner, would it be more advisable to use the rotation model or optimized trend, LILO for starters? Boom! Let's go. The rotation model is, I always say, like flying a 747. Once you have it dialed in, it's pretty easy to use, but you have to choose the right assets over the next 12 to 24 months. You have to be able to do your fundamental research and find the winners. Which ones are cheap? Which ones are volatile? Which ones are kind of inversely correlated to the rest of your assets that you choose? Which ones have high Sortino ratios? That's the tricky part. So LILO, optimized trend, super easy. Start there. Don't start with rotation. And the team tells me tomorrow, actually, we have a Black Friday sale starting November 17th, 10:30 a.m. Pacific. Wow, they're very specific on time. Yeah, things are on sale tomorrow. I have no idea what the deal is with that. I don't handle that at all. That's a separate crew. But anyway, enjoy the sale. Next question. Oh, there's another question. I forgot there's so many today. Asymmetric, you and your team have been a gift. Thank you. And again, it has been a hard 2025, with the exception of AI. That's been phenomenal. But crypto has been brutal. So thank you for still being positive. It has not... The crypto has not been a gift this year. Thank you so much for sharing. It's made my family's life exponentially better. Woo. You frequently say that a 2x ETF are for short duration. I'm trading on a bit of margin, 20%-ish, but most of our trading capital is in the tax-free retirement account. I feel like the Tesla 2x ETFs could give equivalent exposure with less expense than margin, 1.05% versus 10.825%. What am I missing? Thank you for your tireless work. I've been warning people, again, for years, if you want to play a leverage ETF or whatever, 2x, 3x, Tesla, whatever, you get in it for no more than 2 weeks and then you get out. Very important. Let me explain a simple chart that you can all build at home yourself as to why. Real simple. This is TSLL, which is your 2x leverage Tesla ETF versus Tesla. Okay? This TSLL, which is twice the leverage, has gone down 6% over the last 3 years, while Tesla's gone up 260%. I'll say that again. The Tesla underlying has gone up 260%, and Tesla spot, 1x leverage, just buying spot, has smashed it by 6% on something that should have gone up 2x. So if Tesla's up 260%, you'd think the 2x leverage asset would be up 520%. But no. What you're missing, okay, this is why I emphasize no more than a week or 2 weeks in these things. They don't deliver 2x exposure over multi-day or longer periods because they are a daily reset mechanism. There is volatility decay. There is beta slippage. There's compounding drag. There's fees. And this erodes dramatically your returns, even if the market's up, flat, down, etc. Margin, by contrast, gives you true leverage exposure to the underlying stocks past. And that's it. Just less the interest you got to pay. Leverage ETFs are the kiss of death. Ask anybody who's held one for more than 3 to 6 months. They'll call me up and say, hey, this leverage thing has lost my shirt. I've lost 80% in 6 months. What happened? I said, huh? Why are you holding it for more than a week or two? Anyway, don't hold these things long term. If you think something gets really beaten down, like Tesla goes to 106, you think it's going to rebound to 140 in 2 weeks, then you use it. That's it. It's the only scenario. And that was a good scenario, by the way. And helping animals, this week we donated to the Nevada Humane Society to help support animals under their care. There's Maximus from Gladiator. He is blind, diabetic, 12-year-old dog with a heart murmur. And he spent a year and a half at the Nevada Humane Society being adopted. Woohoo, great. And tomorrow, DCA Live with the team, 7:40 a.m. And I hope listen very carefully to all of these videos. Sometimes I say things over and over and over again, and people still miss it. Okay? Make sure there's nothing but gold here. Okay? These are life lessons of how to succeed in investing. Now let's do some live questions. As Bitcoin falls below 94K. Still sucks. So much for Sunday pump day. Nick M, what is your strategy for the remaining portion of your MicroStrategy bag? Thank you. So, in full disclosure, my MicroStrategy position cost me almost nothing. If you imagine the calls I've sold against that position, it's like $10 or so per share. Now, I'm also very light spot Bitcoin. So that's kind of, I call it my Bitcoin anchor baby. And the good thing about MicroStrategy is the same thing that I've been talking about, is the sats per share accretion. Check the Patreon post I made this morning with the updated model of all the buys since inception and the accretion of Satoshis per share since inception. It's gone up over something 11.6% since August 2020. So if you bought one share of MicroStrategy in August 2020, you would have now 11.6 times more Bitcoin per share than you did back then. And tomorrow, if they buy 7,000 or 8,000 Bitcoin, you get another 1.25% more Bitcoin per share. I have a tax situation, so if I make profits, I have to pay a lot of taxes. It's not worth my while. I'm just going to hold it. I've sold nearly a quarter of it, and I went into extreme leverage on Tesla during the Tesla bottom, and that was a good profit-taking rotation. In fact, it was a perfect profit-taking rotation. The only regret is maybe not selling more, but then again, I look at balance, so I need to have a good balance between my Bitcoin and my Tesla, and now I'm way heavy AI, but that's because AI has exploded and crypto's gone down, so I'm holding. And unless we get to, another pair chart of parity with Tesla or something else, maybe I'll take more profit, but I don't see that happening right now. Unless, of course, Bitcoin goes to the moon and Tom Lee is right and we see 200, 250K by the end of the year. Fingers crossed he's right too. Buckhorn, bought some Tesla on the sell-off. Yes, 380, nice one. Psychic Experience, to the moon, let's hope so. Elga Kaida, market bleeding, but mindset strong. Thanks to James for keeping me focused, long-term and not emotional. Yes, leave your emotions at the door. I always imagine myself in a little sailboat in the middle of the Pacific or the Atlantic in a huge storm. Okay? Just stay cool. Hold on tight. Keep your hands on the wheel. Don't capsize. Don't sink. Get through the storm. Be in hard assets. Things will come good over time. You just need to be patient and be very strong mentally. I like the meme with the guy on the roller coaster with hands in the air, like you just don't care. That's like me in the markets. I've been through way worse storms on boats too as well. Let me see. Alex Rogan, hang in there, everybody. Yes. The bull market that was not in 2025. GraphWeb, is Tesla a good option for people who don't know options? No. Do not use leverage ETFs. Okay? Only for a short-term scalp. We're talking 1 to 2 weeks maximum. That's it. Otherwise, you get murdered. You get eaten alive by fees. Doc Intern, if somebody had about 20,000 to invest today for a shorter 8 to 12 month time frame, what will be your NFA? The best, and I'm going to sound like a Elon Musk fanboy. When you invest in something, you have to balance risk and reward. I can see very clearly where Tesla's going a year from now, okay? Nothing else I can see as clear as that. Nothing. And they have like 12 different paths to making tons of money. It's going to be insane. 2026 is going to be great for Tesla, and 2027 is going to be off the hook. Elon's words, not mine, but I do look at the data and study it daily. And again, we're on the cusp of the revolution of transport. By the way, I did a long drive in the Tesla Cybertruck and version 14.1.7 yesterday. I was in fog so thick I couldn't see anything. I trusted the car blindly. I was blind. I couldn't see a thing. it just shot through the fog. I don't know how it did it. And the day before that, a woman veered out of her lane and it crashed into me head on. She would have died. I would have survived in the Cybertruck, but she would have died. The car just veered to the right and carried on like nothing happened. I would have slammed on and broke. The car just evaded the accident like that. It was just unbelievable. And the Cybertruck has also saved Jeff Lutz's life, probably in a freeway accident too. The technology is just absolutely wild and incredible. That's why I believe Tesla is the best risk reward. Throw it into 20K into your Doc intern Tesla under 400 tomorrow if you can. Invest with Doc. Love the Patreon. MicroStrategy leaps on the bear market again. Yeah, when the time comes. If we get to a NAV premium, all right, at like a 20-30% discount to Bitcoin, guess who's going to be buying? And you'll hear about it first. Big thank you, Super Stick. I'm losing my voice now. It's a good thing it's ending. Thank you for your super sticker, Martello45, Beatty McGee, Crypto Last Outpost, DBF 430, Swiping No Swiping, Dog 1, Sigma 103, Green Candle, Joseph Samuel, GQ Trader, AZ Rolfa, Manu Hooligan, sounds like a soccer fan. We have Liverpool fans and Man United fans as well. Awesome. Shawnee, I know you like your Liverpool team. And thank you as well to Team D Tesla, Shawnee, SD, and K8. Appreciate you all for coming. Have a good night. See you first thing tomorrow morning. Bye-bye.